Welcome back to the halftime report. After spending 2018 in the gutter, the emerging markets ETF, EEM, rallying 11% this year, nearly out of correction. Bob Pisani and the ETF Edge crew at the New York Stock Exchange tell us how to play it. Hey, Bob.
Hello, Scotty. Happy Monday. Emerging markets have mostly underperformed the U.S. for the last several years. But this year, led by China, emerging markets are showing some signs of life. China is the best performing large country this year, with the Shanghai up over 20%. Emerging market ETFs are matching the S&P's roughly 12% gains. So what's the best way to play the emerging market rally? Let's bring in Todd Rosenbluth. He's the head of ETF and mutual fund research at CFRA. Tom Lydon, an old friend of ours at ETFtrends.com. Tom, let me start with you. Look at these emerging market ETFs. The one thing you can't get away from is China dominates everything. It's 30% of the EEM. Is it safe to place a bet on China now, given their economic concerns?
Well, emerging markets have been unloved, as you say, for the last 5 years, Bob, but recently it's been all about China. And China does make up a big part of emerging markets today. The idea is, do you want to play all emerging markets, or do you want to be specific on China? And there are a lot of varieties out there.
A lot. Todd, we've noted before, Vanguard has a big competitor to the EEM, the VWO. The EEM has South Korea in it. But Vanguard has decided in their own indexing with the companies that they work with, they're leaving out South Korea, and that creates a somewhat different performance.
Right. You really need to look under the hood with ETFs, and emerging markets is a perfect example of that. So you mentioned EEM, and a cheaper version, IEMG, has South Korean exposure. It's about 14–15% of the portfolio. VWO does not have that, so it has more exposure to India, to South Africa, other countries besides China.
Yeah, Tom, I have, Direxion has an interesting bet on how to play the emerging market. They'll let you go long their emerging market ETF and will short the MSCI EAFE, which is a very interesting way to play it. Is that kind of pairs trade really work?
It is. It's a pairs trade within an ETF. So first, RWED is 150% in emerging markets and 50% short in developed markets, and RWDE is 150% long developed, 50% short emerging markets if you want to take the other
Right,
trade.
so you can go long emerging markets or short the emerging markets using these. These are one of the few leverage inverse kind of ETFs or pairs trade that I've seen that is an intriguing idea. You can make a directional bet very clearly.
Right, investors can be tactically using ETFs, whether they're focused only on emerging markets or if they want to do that relative to developed markets. And these Direxion products are new, but are very compelling to take a look at.
Is there any hope for frontier markets? We kind of dropped them. We've dropped Middle East, we've dropped Africa, and yet frontier markets are also doing well this year. They're competitive.
It's all about liquidity, Bob, and making sure you have enough of the underlying. But, you know, finally, if you want to play China A shares, ASHR, which is the Asher ETF, mainland China, that probably is the way to go.
Pure play on mainland China. Guys, thanks very much. Always appreciate it. For more on how to play emerging markets and the latest ETF trends, tune into our live show, 1 p.m. Eastern Time on ETFEdge.com.